Hey everyone! With BlockSonic, you get the top Bitcoin news of the day in a practical narrated format, so you never miss an important market move. With BlockSonic, you don't need to search for information. We find it for you. XRP ETFs see $40 of outflows after 8-week run of inflows. The outflow was primarily due to a $47.25 million redemption from 21 shares Toxer, while other funds remained stable or positive. By Sharia Malwa. U.S. spot XRP exchange-traded funds ETFs recorded their first net outflow day since listing in mid-November, ending what had been the cleanest inflow streak among major crypto funds. The funds recorded outflows of $40.8 million on Jan 7, according to data tracked by Sosa Value by NI. The day's performance marked a notable shift from nearly 2 months of uninterrupted gains that helped push cumulative inflows to $1.2 billion and total net assets to about $1.53 billion, roughly 1.16% of XRP's market cap. However, most XRP ETFs still posted small inflows or flat flows on the day. The negative print was driven almost entirely by 21 shares Toxer, which saw a $47.25 million redemption. Other issuers such as Canary, Bitwise, and Grayscale remained modestly positive. Total value traded across the complex stood at $33.74 million, suggesting activity but not panic. The context matters because Bitcoin and Ether spot ETFs both saw outflow days shortly after they listed, meaning XRP's run since November had been unusually clean. That made the streak part of the narrative, with steady ETF demand cited as a key reason. XRP outperformed in early 2026, even as broader markets stayed range-bound. The first outflow does not necessarily signal a trend reversal, however. Single fund redemptions can reflect portfolio rebalancing, tax and allocation adjustments, or market maker inventory management rather than a broad shift in investor appetite. Still, the timing will be watched closely. XRP has rallied sharply into the new year and remains sensitive to flows, with traders increasingly using the daily ETF tape as a real-time read on whether demand is still absorbing supply or beginning to cool. KuCoin hits record market share as 2025 volumes outpace crypto market. KuCoin captured a record share of centralized exchange volume in 2025, with more than $1.25 traded as its volumes grew faster than the wider crypto market. Bitcoin bounces to $90,500 after testing key support of $89,200. The early rally to start the year failed to break past $95,000, setting the stage for the current pullback, according to one trading firm. Bitcoin bounces to $90,500 after testing key support of $89,200. The early rally to start the year failed to break past $95,000, setting the stage for the current pullback, according to one trading firm by Helene Brown, James Van Straten. Bitcoin $91,139.23 was off its worst levels in morning U.S. trade Thursday, rising back to $90,500 after having fallen to roughly $89,300 earlier in the session. This third consecutive day of pullback comes after Bitcoin rose to just shy of $95,000 on Monday, with lighter trading volumes and a wave of profit-taking being observed by crypto trading firm Wintermute. After initial re-risking from the yearly open, the market failed to break the key $95,000 level, which resulted in two-way trade as exchange-traded fund ETF. Outflows dominated the last two sessions, said Jake Ostrowskis, head of O2C at Wintermute. Additionally, at work may be continued declines and expectations for a near-term rate cut by the Federal Reserve, with the probability of an easing at the Fed's January 28 meeting now at only 11.6%, according to CMA. 1 week ago, the odds stood at 15.5% and 1 month ago at 23.5%. A key technical level Bitcoin is currently fighting is the 50-day moving average, a widely followed trend indicator that smooths price action over the past 50 trading days. This moving average is currently at $89,200, nearly the exact level at which Bitcoin bounced today. Derivatives positioning shows growing leverage in the market. Open interest, which represents the total number of outstanding Bitcoin futures and options contracts, has climbed to a 3-week high of nearly 700,000 Bitcoin. This marks an increase of roughly 75,000 Bitcoin since the start of the year, suggesting traders are adding exposure rather than reducing risk. At the same time, perpetual futures funding rates remain positive at around 0.09%, indicating that long positions are paying shorts to maintain exposure. Persistently positive funding during pullbacks suggests traders continue to buy dips using leverage. When prices fail to move higher, this crowded long positioning increases the risk of long liquidations, as even modest downside moves can force leverage traders to close their positions, adding further selling pressure. KuCoin hits record market share as 2025 volumes outpace crypto market. KuCoin captured a record share of centralized exchange volume in 2025, with more than $1.25 it traded, as its volumes grew faster than the wider crypto market. XRP ETFs see $14 of outflows after 8-week run of inflows. The outflow was primarily due to a $47.25 million redemption from 21 shares Toxer, while other funds remained stable or positive. If you believe in what we're doing and want to support BlockSonic's growth, just scan the QR code on the screen or copy the link in the video description. Every contribution makes a difference and helps us keep delivering quality, independent, and up-to-date content for you. Crypto for Advisors 2026, Crypto and Beyond. 2026 is here. The crypto year ahead: banks, stablecoins, tokenization. Discover why the biggest risk for advisors is now under allocation. By Andy Baer, Sarah Morton. You're reading Crypto for Advisors, CoinDesk's weekly newsletter that unpacks digital assets for financial advisors. Subscribe here to get it every Thursday. Happy New Year! Overall, charity, as we enter 2026, the question for wealth management has fundamentally shifted. It is no longer will digital assets matter, but rather can your firm afford to be the one that says no? Andreessen Horowitz declared 2025 as the year crypto went mainstream, and for good reason. Traditional finance, TradFi, isn't just watching from afar anymore. It's undergoing a massive structural upgrade. We are now seeing blockchain move from a niche experiment to the base layer for financial systems because of its undeniable efficiency and transparency. In today's newsletter, Andy Baer from CoinDesk Indices provides his 2026 crypto outlook covering banks, Bitcoin, privacy, and the abundance of product choice. In Ask an Expert, I cover top trends advisors need to know heading into this year. If 2025 reminded us of anything, it's that price or growth predictions can go awry. We prefer to focus on the thematic development progress that investors and traders can look forward to and track to help deepen their conviction to deploy capital in digital assets. In 2025, we expected. For 2026, here are some topics of thematic development we expect and will be glad to see. Hamstrung by the statutory capital price tag of holding crypto, banks have allowed the crypto-native community another head start year to drive adoption and innovation. Whether or not some bank skepticism of crypto is earnest or circumstantial, we expect that they will merge onto the road with more force and presence in 2026. Demand from clients maintaining competitiveness and sheer revenue potential will make any other choice unappealing. Traders and investors, especially retail, will face a dizzying array of new and newly accessible crypto and blockchain-related products in 2026, particularly in the United States. Tokens via SEX index, ETFs on tokens, tokens on equities, prediction markets, DATs, structured products, yield products, second-gen NFTs. The list goes on. Furthermore, retention of assets on-chain via stablecoin and tokenized yield product wallets will draw new users into the fold. How many more friends will split dinner checks with USDC? On the other end of the scale, now many more regulated futures contracts will be collateralized with USDC. The breadth of new crypto-linked ETFs, while offering maximum opportunities to traders, may overwhelm longer-term investors and their advisors, our designated 5%ers, who simply want to track crypto. We expect, self-referentially, that indexed financial products, ETFs, listed derivatives, structured products, and tokenized baskets will become more available, broadly referenced and utilized. The winning index, which we predict will be CoinDesk 20 and CoinDesk 5, will become new liquidity engines for constituents. Bitcoin's relative simplicity, internally consistent use and investment cases, tenure, and US ETF head start have led it to represent crypto and the crypto market. High historical correlations between Bitcoin and other crypto assets have supported this shorthanding. In 2025, the focus on stablecoins, top layer 1 protocols Ethereum and Solana, and staking have helped pave the educational road for new crypto adopters. Good progress has been made there to help reinforce the intuition of Bitcoin being one thing, and much of the rest of the digital asset class being something else. We expect Bitcoin's correlation to the CoinDesk 20 index to decline in the future, despite Bitcoin being its largest constituent. We note that the 90-day correlation fell to around 0.8 during the height of the market in Q3 before ending the year above 0.95. We see lower correlations as a sign of health and greater opportunity. Privacy has been a controversial topic in crypto. Not only does privacy violate the original spirit of Bitcoin and crypto radical decentralization, but has helped feed the crypto is used by criminals narrative, at times justifiably. Ultimately, a financial system without privacy is untenable, and integration into traditional markets will require accommodation. 2025 saw the progress made by semi-privacy solutions, such as Canton take greater root. On the other end of the scale, Zcash's spectacular 10x return in Q4 in an aforementioned soft tape reminded us that the voices of the enthusiasts can often be the loudest. For more, read the full Digital Assets Quarterly Review and Outlook. Andy Baer, CFA, Head of Product and Research, CoinDesk Indices. We are currently facing a triple threat that is reshaping how money moves, how assets are held, and how clients expect to be served. Q. What should advisors know now that the banks will be offering crypto? Wall Street's most prominent crypto skeptics have pivoted. Jorgen, CEO, Jamie Dimon, once a vocal critic, conceded in late 2025 that crypto is real and that blockchain, stablecoins, and smart contracts are genuine innovations that will be used by all of us to facilitate better transactions. CoinCub 2025. Major global institutions like BVBA, Bank of America, and Morgan Stanley have officially moved beyond the 1% experiment. Their investment committees are now recommending 4% portfolio allocations to digital assets for high net worth clients. TradingView 2025. The verdict: For advisors, the career risk has flipped. The danger is no longer in participation. The danger is now in underallocation. Based on the latest 13 filings, U.S. companies are leading the charge. While adoption isn't just a U.S. story, American institutions are dominating the top 10 list. The most critical data point for the 2026 outlook isn't a price target. It's a client demand metric. 82% of investors now state they are more likely to work with an advisor who offers digital asset guidance. Investment News, 2025. Clients are no longer asking if they should buy Bitcoin. They are asking how to secure it, how to report it for taxes, and how to integrate it into their estate plans. As Charles Schwab and Morgan Stanley turn on direct access for their 15,000 advisors this year, the competition for these assets will be fierce. KuCoin hits record market share as 2025 volumes outpace crypto market. KuCoin captured a record share of centralized exchange volume in 2025, with more than $1.25 it traded as its volumes grew faster than the wider crypto market. CoinDesk 20 performance update, Ripple XRP drops 4.5% as nearly all assets decline. Aptos was also an underperformer, down 5% from Wednesday. JP Morgan says the crypto sell-off may be nearing a bottom as ETF outflows ease. Flow and positioning data suggest the recent crypto market correction may be running out of steam, with early signs of stabilization across ETFs and derivatives. By Will Canny, AI boost. JP Morgan, JPM, said there are growing signs that the recent sell-off in crypto markets may be nearing a bottom, with flow and positioning indicators pointing to stabilization after heavy de-risking late last year. Signs of a bottoming out in January are also seen in other crypto indicators, in perpetual futures and in our position proxies on CME futures. Analysts led by Nikolaos Panagirtsoglu wrote, Bitcoin $91,139.23 and Ethereum $3,120.47. Exchange traded funds, ETFs, saw notable outflows in December, even as global equity ETFs. That divergence underscored how sharply investors reduced crypto exposure into year-end. Bitcoin and Ethereum have both fallen in recent months after strong gains earlier in the cycle, with Bitcoin down double digits from its recent peak and major altcoins posting steeper declines. The correction has coincided with heavier volatility, ETF outflows, and a broader cooling in risk appetite across global markets, leaving crypto prices range-bound after last year's rally. However, the analyst noted that ETF data so far in January suggests selling pressure is easing, with flows into Bitcoin and Ether funds beginning to stabilize. The bank's analysts see similar signs of bottoming in perpetual futures markets and in its positioning proxies derived from Chicago Mercantile Exchange, CME. Futures indicating that both retail and institutional investors may have largely completed the position reductions that dominated the final quarter. This tentative stabilization could be reinforced by MSCI's decision not to exclude Bitcoin and crypto treasury companies from its global equity benchmarks in the February 2026 review, the report said. While MSCI signaled a broader review of its methodology in the future, the analyst said the decision provides near-term relief, particularly for strategy-linked exposure, and reduces the risk of forced selling tied to index changes. The report also pushed back on the idea that deteriorating liquidity drove the recent correction. The bank said its market breadth metrics, which measure the price impact of trading volumes in CME Bitcoin futures and major Bitcoin ETFs, show little evidence of worsening liquidity conditions. Instead, the firm argued that de-risking triggered by MSI's October announcement around potential index exclusions was the primary catalyst for the downturn. Taken together, J.P. Morgan analysts concluded that the bulk of the crypto position unwind now appears to be behind the market, with January's data pointing to a possible bottoming phase rather than the start of a new leg low. Read more. Asset manager Bitwise sees 3 tests for crypto's 2026 rally. KuCoin hits record market shares 2025. Volumes outpace crypto market. KuCoin captured a record share of centralized exchange volume in 2025, with more than $1.25 traded as its volumes grew faster than the wider crypto market. XRP ETFs see $4 of outflows after 8-week run of inflows. The outflow was primarily due to a $47.25 million redemption from 21 shares Toxer, while other funds remained stable or positive. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Stand with Crypto Advocacy Group sees nearly 700,000 new members ahead of 2026 election. The organization, established by Coinbase to mobilize crypto enthusiasts, has built up a 2.6 million member base across 50 state chapters as U.S. elections loom. By Jesse Hamilton. The digital assets advocacy group Stand with Crypto grew by 675,000 online signups last year, reaching about 2.6 million in the U.S. as the country heads toward its 2026 congressional elections. The group has been deploying its members into political letter-writing campaigns to support U.S. crypto legislation, totaling 925,000 in 2025 and more than 1 million emails since its founding, according to a Thursday report shared with CoinDesk. It now has chapters in every state, the group said, and it's organized 4 fly-ins to Washington to directly engage in policy efforts. In October, it announced it had coordinated 250,000 letters to lawmakers to counter Wall Street bank lobbying that sought to reopen the stablecoin yield stance and the guiding and establishing national innovation for U.S. stablecoins. Genius. That argument over whether the dollar-based tokens should be able to offer yield to users has marked a fundamental dispute between the crypto sector and banks. Bankers see it as a threat to their core deposit-taking business, and digital assets platforms want to offer incentives for customers to utilize their businesses. Coinbase set up Stand with Crypto in 2023 and funded its initial activity, and it remains a partner and donor alongside other companies such as Kraken, Gemini, Anchorage Digital, and Paradigm, in addition to donations from members. Since its founding, U.S. voters have increasingly seen crypto as an important political topic that shapes their thinking about candidates, according to polling in the past couple of years. One of the organization's most high-profile efforts is the grading of U.S. politicians along lines of crypto support. Congress midterm elections are approaching in November, and lawmakers are likely to have further opportunities in the coming months to make decisions to advance or resist crypto legislation. 2 months ago, Stand with Crypto launched its 2026 candidate questionnaire that's intended to evaluate candidates in federal and state races. Its results, expected to be released early this year, will direct how the organization is deployed in the elections. Read more. Advocacy group Stand with Crypto says it's exceeded 1 million signups. KuCoin hits record market share as 2025 volumes outpace crypto market. KuCoin captured a record share of centralized exchange volume in 2025, with more than $1.25 traded as its volumes grew faster than the wider crypto market. Florida revives push for Bitcoin reserve with new 2026 bill. House Bill 1039 would let Florida invest in crypto outside its treasury, reviving a withdrawn proposal and signaling the GOP's growing embrace of digital gold. Digital assets to move from speculation to infrastructure in 2026. B. Riley says, regulatory clarity, tokenization, and bank adoption will push crypto firms from balance sheet accumulation toward real operations. By Will Kenny, AI Boost. Digital assets are set to cross a critical threshold in 2026, shifting from largely speculative instruments into practical financial infrastructure as regulation matures and traditional institutions deploy blockchain technology at scale, investment bank B. Riley said in a Thursday report. In 2026, we expect the digital asset market to transition from speculation to practical utility as regulatory frameworks are expected to mature and blockchain integrates into global financial infrastructure. Analysts Wader Shabalin and Nick Giles wrote. The analysts argued that clear rules around stablecoins, growing institutional tokenization of real-world assets, stronger governance frameworks, and improving interoperability between bank ledgers are combining to change how digital assets are used, not just how they're traded. This evolution is prompting digital asset treasury companies, DATCOs, to pivot away from simply accumulating tokens toward operational deployment that can generate recurring revenue, the analysts said. The group of 25 digital asset treasury stocks that the bank tracks continue to have an enterprise value of about 0.8 times the market value of their crypto holdings. The metric, known as NAV, is unchanged since mid-December, even as the underlying business models begin to look more like operating companies than passive investment vehicles. Enterprise value is a firm's market capitalization plus debt minus any cash. The analysts also flagged a recent decision by MSCI to reverse a proposal that would have excluded DATCOs from major global equity indexes. Strategy. Nestor, the largest corporate holder of Bitcoin dollars 91,323, has come under selling pressure in recent months on concerns it could be dropped from MSCI's benchmarks, a move that may have forced some institutional investors to sell and weighed further on the stock. MSCI said more work is needed to distinguish between investment companies and operating businesses that hold digital assets as part of their core strategy. B. Riley said the pause is supportive for the sector because index inclusion helps sustain passive fund flows and reduces the risk of forced selling. The report highlighted Bitmining Immersion Technologies, BMNR, as a key example of the operational shift it expects to accelerate next year. The treasury company continues to build its Ethereum $3,120.47 position, while expanding staking operations ahead of a planned infrastructure launch in early 2026. The analysts reiterated their buy rating on Bitmine and a $47 price target, saying the stock's valuation looks attractive relative to its staking-driven revenue potential, even as shareholders prepare to vote on a sizable increase in authorized shares to support future growth and an acquisition. The shares were 1.75% lower in early trading at $29.83. Read more. Tokenization supercycle set to drive crypto's next leg higher in 2026. Bernstein. KuCoin hits record market share as 2025 volumes outpace crypto market. KuCoin captured a record share of centralized exchange volume in 2025, with more than $1.25 it and traded as its volumes grew faster than the wider crypto market. XRP see $4 of outflows after 8-week run of inflows. The outflow was primarily due to a $47.25 million redemption from 21 shares Toxer, while other funds remained stable or positive. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Florida revives push for Bitcoin reserve with new 2026 bill. 1039 would let Florida invest in crypto outside its treasury, reviving a withdrawn proposal and signaling the GOP's growing embrace of digital gold. By Olivier Acuna. Florida lawmakers reignited a push for legislation to include digital assets on the state's balance sheet, reviving a proposal to create a state-run cryptocurrency reserve after a similar effort stalled earlier this year. Filed by Republican Rep. John Snyder on Jan 7 for the 26th legislative session. House Bill 1039 would establish a strategic cryptocurrency reserve fund outside the state treasury and authorize Florida's chief financial officer, CFO, to manage crypto investments under defined risk controls. The bill calls for independent audits and an advisory committee and revives ideas from withdrawn 2025 legislation that would have allowed up to 10% of certain state funds to be allocated to Bitcoin. Bitcoin dollars 9139.2. 3. The proposal does not mandate a minimum allocation, instead granting the CFO discretion over whether and when to deploy funds. The renewed effort has ties to Florida State Senator Joe Gruters, an ally of President Trump who backed earlier versions of the proposal, underscoring Bitcoin's growing appeal as a potential hedge or digital gold. The fund, which will be managed by the state's chief financial officer, CFO, according to the bill, is designed to serve as a shield against inflation. Chief Financial Officer Jimmy Patronis has supported the effort, describing Bitcoin as digital gold in public statements and stating that limited exposure could enhance diversification within state-managed funds. If enacted, Florida would join a small but growing group of U.S. states advancing digital asset legislation, including New Hampshire and Texas. Wyoming passed dozens of crypto-friendly laws clarifying the legal status of digital assets and blockchain firms, while New Hampshire recently became the first state to enact a law explicitly allowing public funds to be invested in cryptocurrencies, creating a precedent Florida lawmakers have pointed to. The proposal also fits within Florida's broader approach to digital money. In 2023, Governor Ron DeSantis signed legislation barring central bank digital currencies, CBDCs, from being recognized under the state's commercial code, positioning Florida as skeptical of federally issued digital money while remaining open to decentralized alternatives. HB 1039 is expected to be taken up during the 2026 legislative session. If approved by both chambers and signed into law, implementation would follow on a timeline set by the bill, potentially making Florida one of the largest U.S. states to formally experiment with crypto as a reserve class asset. KuCoin hits record market share as 2025 volumes outpace crypto market. KuCoin captured a record share of centralized exchange volume in 2025, with more than $1.25 it and traded as its volumes grew faster than the wider crypto market. Stand with Crypto Advocacy Group sees nearly 700,000 new members ahead of 2026 election. The organization, established by Coinbase to mobilize crypto enthusiasts, has built up a 2.6 million member base across 50 state chapters as U.S. elections loom. Meme coins DeFi lead declines as caution seeps in. Crypto Daybook Americas. Your day ahead look for Jan 8, 2026 by Omkar Godboli. You are viewing Crypto Daybook Americas, your morning briefing on what happened in the crypto markets overnight and what's expected during the coming day. Crypto Daybook Americas will kickstart your morning with comprehensive insights. If you're not already subscribed to the email, click here. You won't want to start your day without it. By Omkar Godboli, all times set unless indicated otherwise. The CoinDesk Memecoin Index, CD meme, lost 8.6% in the past 24 hours, leading losses across all other sectors. The DeFi Select and Metaverse indexes both fell more than 5% Dutch-wide. Bitcoin, $91,39.23. The leading cryptocurrency by market value dipped below $90,000 during Asian hours, extending Wednesday's pullback from over $93,600 and was recently trading nearly 2% lower. Charts showed immediate support at around $89,200, stemming from the widely tracked 50-day simple moving average. The end of the week will bring an answer to the question of whether this curve has become a support level or whether we saw a false breakout at the start of the year. Alex Kupsikevich, chief market analyst at the FXPO, said in an email. Other majors such as Ethereum, $3,120.47, Solana saw $137.97, XRP $2.1512, and Doge $2.1425, traded 2% to 6% lower. The privacy-focused Zcash ZEC $421.45 crashed 15% after the development team behind the token left Bootstrap, a non-profit organization created to support the project. The risk-off mood follows renewed outflows from the U.S.-listed spot Bitcoin exchange-traded funds, ETFs. The ETF suffered net outflows of $729 million, reversing over 50% of the $1.16 billion in inflows of the first 2 days of the week. The appetite remains weak for Ether, XRP, and Sol ETFs, too. In other key developments, Bitcoin's BV index, which measures the 30-day implied volatility, remains little changed at around 45% for the fifth straight day, despite signs of an upswing in its Wall Street counterpart, the VIX index. The VIX bounced to nearly 15%, the highest since DEC 19, indicating caution ahead of Friday's jobs report, which could influence interest rate expectation. Further, participants on Prediction Market Kalshi assign a 30% probability to the Supreme Court ruling in favor of U.S. import tariffs, implying a 70% chance that they are set aside. The decision could breed volatility across all asset classes, including Bitcoin. The dollar index, which tracks the greenback's value against major fiat currencies, held steady near 98.7, keeping its recent gains to offer bearish cues to risk assets. Stay alert! Read more. For analysis of today's activity in altcoins and derivatives, see Crypto Markets Today. For a more comprehensive list of events this week, see CoinDesk's Crypto Week Ahead. For a more comprehensive list of events this week, see CoinDesk's Crypto Week Ahead. For a more comprehensive list of events this week, see CoinDesk's Crypto Week Ahead. KuCoin hits record market share as 2025 volumes outpace crypto market. KuCoin captured a record share of centralized exchange volume in 2025, with more than $1.25 billion traded as its volumes grew faster than the wider crypto market. Start of the year recovery rally stalls. Crypto Daybook Americas. You are viewing Crypto Daybook Americas, your morning briefing on what